Shares of BCE are trading lower after the company missed revenue expectations. Joining us now to break down BCE's fourth quarter results, the performance of its new U.S. acquisition of Ziply Fiber, and how AI is shaping the business is Curtis Millen, CFO of BCE and Bell Canada. It's good to have you join us today, sir. Thanks for taking the time.
Hi, Lindsay. Thanks for having me.
Let's start with BCE reporting lower revenue than what most analysts were expecting. What was driving those numbers there?
Yeah, I think ultimately, Lindsay, you're seeing a few things happening. Service revenue, it's important to point out, service revenue actually grew. Product revenue, which was a decision we make strategically, product revenue is down as volumes in market were a little bit down. So wireless prices were a little bit down in industry, so fewer contracted sales, but basically decision making on our part, strong growth, but more bring your own device and fewer contracted sales. So it leads to product revenue weakness, but ultimately service revenue strength. Even more importantly, if you look at 2025, free cash flow growth of 10%, free cash flow growth post lease repayments, 17.5% free cash growth year over year. And importantly, we're driving that free cash flow strength while we continue to invest in our business. So $3.7 billion of CapEx in full year. We continue to invest for the future, so we feel pretty strong about our ability to generate free cash flow going forward.
And we are, of course, going to get to some of the investments that Bell is making. But just first of all, just going back to the earnings report, like you posted better than expected profit this quarter. So tell us what's behind that side of it. Is that because of the investments you've made?
It's investments we've made, but I'd say it's also just investments we've made in our customers and our products. So we tend to think about, the first of our four strategic pillars is in kind of put the customer first. So, the focus on improving customer experience is really showing results, not only in our gross ads in terms of sales and market, but there's been a churn improvement 3 quarters in a row at this point. So, we still have the ability to go out and create new customers, new sales, but we're holding on to our customers more and more as we improve customer experience and reduce churn. So ultimately that leads to better financial results, but it all starts with better customer experience and lowering churn.
Is that why you're holding on to your customers, better customer experience, or is it more of a lack of competition?
No, I mean, look, this is a competitive industry, as we've all seen. Pricing in the market is a competitive venture. So the offer and value that we're providing to customers continues to go up, and our focus on leveraging technology to provide service when and how customers want it, access to self-serve, better digital capabilities, and frankly, just delivering a better service and better experience day over day, week over week, month over month is driving improved churn performance.
Okay, so let's talk about some of the investments that Bell has been making. I know AI is a real big focus for BCE moving forward. It already has been. There are some data centers that Bell AI Fabric Network has invested in and is planning to help build out. Tell me more about those data centers. Where are they exactly, and where are we in the process?
Yeah, thanks for the question. I do think it's an interesting moment in time. I mean, AI is here. It will help reshape our economy. And if we can help be part of that kind of Canadian sovereign backbone, then I think it's good news for our shareholders, but good for the Canadian economy writ large. Ultimately, yes, given where we sit, given our telecom and ability to build out fiber, data centers, as well as we wrap a Teco and Bell Cyber capabilities around it, I think we're in a pretty good position to actually help accelerate AI adoption in Canada and play an infrastructure role, and as I said, kind of backbone of AI and data center role there. So good for the economy, good for our enterprise customers, and good for us financially.
What about the acquisition of Ziply Fiber? I know that was completed just kind of midway through last year. Is that part of Bell's kind of plan to integrate more into the U.S.?
Yeah, it's a fair question. I think the main story is fiber, right? Fiber is just a superior product to cable. I mean, it's superior in Canada. We see that with share of net adds. Our fiber loads are very strong where we have fiber. And it's a similar experience in other jurisdictions and including in the US. And it so happens that in Canada, we've built out far more fiber than they have on a relative basis in the US. So there's much less penetration of fiber. So we saw an opportunity to actually extend our capabilities, and it's a very strong management team in the US. So our combined capabilities are going to allow us to drive fiber growth in the US and bring fiber to communities in the US that frankly only have copper or cable. So we are first fiber in the market, which is why we're able to drive such growth and frankly meet customer demand.
What's the timeline for that, do you think?
I think it's ongoing. So we closed, as you said, 5 months left in 2025, and the ramp up there is just continuous at this point. We have plans to reach 3 million homes by the end of 2028. We're about halfway there, with plans to get to 2028 over a longer term horizon. But the opportunity is pretty significant. I mean, fiber ultimately just wins in the marketplace.
Got it. I remember your investment day back in October. You announced, or BCE announced, it was going to save $1.5 billion in costs by 2028 through, quote, company-wide transformation and continued focus on operational efficiencies. Where specifically, where will these cost-saving measures come from in the company?
Yeah, thanks, Lindsay. And look, we're halfway there, and it's 100 different files and it's 100 different data points. But if I had to explain it under a broad theme, one is, as I talked about, our customer experience and customer efficiency is just getting better and better. So that means fewer calls to the call center. Folks are moving online. Customers are more comfortable in a digital world. So a lot more self-install, self-serve, digital capabilities. And as we improve our customer experience and customer service, again, frankly, folks don't have to call us or interact with us as much because they don't have problems that need to be solved. So the continuation of digital transformation across our entire kind of internal workflows, as well as all of our interactions with customers, ultimately lead to more efficient customer experience, happier customers, customer transactions, and more efficiencies for us on the cost saving side.
So the cost saving comes from customer satisfaction.
Yeah, ultimately, I mean, it's one of those rare cases where providing better customer service actually leads to more cost-efficient service as well.
Okay, just lastly, we were talking about competition a little bit earlier, a different kind of competition. This deal between Netflix and Warner Brothers Discovery, if that goes through, obviously that's still pending. There's a bit of back and forth there. How much do you anticipate that might hurt Crave's distribution deal with HBO?
Yeah, it's a fair question, Lindsay. Ultimately, at this point, I would point to a couple of facts. One is, we have a lot of content on Crave. Kind of around the world, folks have recognized some shows that we have produced ourselves in Canada, Canadian content, so Empathie in French language at the start of the year, and more recently, Heated Rivalry. So we do have a lot of different content, not just from Warner Brothers or HBO on Crave. And I'd say it's a great service. I mean, we uploaded another 10,000 hours of content, and we loaded an incremental 1 million subscribers through 2025. So 1 million new subscribers to our content streaming platform. So we're incredibly proud of the content that we produce and the streaming service that we offer to our customers.
So the potential deal between Netflix and Warner Brothers is not really a concern for BCE?
I think we're just going to continue doing what we're doing, and that's providing the right service with great content on air.
Okay, we will leave it there. That's all the time we have. Curtis Millen, CFO of BCE and Bell Canada. I appreciate you joining us today. Thanks so much.
Great. Thanks very much, Lindsay. Thanks for having me.
Thanks.